What's up guys, Ben here and welcome to Motivation to Invest. The stock market is currently on a major rally as the results of the election become more and more certain. We've seen many stocks rally, including many which I've mentioned previously on this channel. Some of my favorites include Alphabet, which is up by over 6%, and this is great for a company which is worth over $1 trillion, so it takes a lot to move that share price. Then we have the great Amazon. Many say that Amazon couldn't go much higher, but that's up by nearly 8% today. And then we even have Uber, which is up by nearly 15% today. Now, the reason Uber is up is slightly more specific than the general market rally, and that's because it's had some regulation approved in California to say its employees are not actually employees, they're still freelance contractors. So that really shows Uber in some positive light. But in this video, I don't really like to be too short-term focused because it's great to see these stocks going up now, but then we question, well, shall we buy now? But really, the worst time to buy is when they've just gone up. The best time to buy is months ago, for example, when I mentioned about Alphabet, or even weeks ago or days ago. So what's the next stocks we can buy right now? Now, I'm not saying these stocks can't go higher. Many of them can, and I own all of them in my portfolio. But what other stocks can we buy right now, which may be a little bit more of a deal? Well, for that, I'm going to dive into the latest trades by Ark Invest. Now, many of you guys know Ark Invest is an investment firm which specializes in disruptive and innovative technology. Their CIO and CEO, Cathie, is widely regarded as the biggest Tesla bull and predicted a $10,000 price target on Tesla a few years back. So let's dive into their latest trades now for a little bit of inspiration. And I'll show you guys one particular stock which has caught my eye. So here we are, guys. We're inside the latest trades for Ark Invest. Now, as you can see straight away, there's one here. Boom. Z Holdings Corp. Buy. Quite a large purchase, 567,000 shares to make up 0.3807% of their ARK financial ETF. Let's dive into this company. The first thing I need to state about this business is it's a Japanese company. Now, I stated previously on a video that the great Warren Buffett, a legendary investor who had previously been accused of sitting on a lot of cash, actually invested over $6 billion into the top 5 Japanese trading houses, nicknamed the Sogo Shosa. So it's not just Cathie Wood and Ark Invest who's bullish on Japan, it's also Buffett. So these are two very different people with two very different investment approaches, yet they're both investing into Japan. Now, I went through a whole analysis on investing into Japan, so I'll leave that in a link below you can check out. But one thing's to say that they had a major bull run back in the late 90s, early 2000s during the tech bubble. This bubble popped, and since then the Nikkei 225, which is the major index in Japan, has been moving sideways ever since and not produced many healthy returns for investors. But could this be the turning point for Japanese stocks? I think so, and also Warren Buffett thinks so, and Cathie Wood. Also, let's not forget the elephant in the room, and that is this big global crisis which we're all living through, which is impacting many economies in many Western countries. So let's look at the number of cases in Japan. So here's the list. We've got top number of cases here. We can see US tops the list, over 9 million cases, nearly 10 million cases. Then we've got India, Brazil. Now, of course, some of this is based on population, but let's see where Japan is on the list. All the way down here. Number 51. They've only had 100,000 cases. Now, that's 10% of the number of cases in the US. Now, to me, that says, firstly, that their economy will not be impacted by anywhere near the amount which the US will and Europe. So that's another great reason to invest in Japan. But let's dive into some more details about this particular company, Z Holdings, and see whether this stock is a good buy. So here we are. This company is actually called Yahoo Japan. Now, we all know Yahoo, once popular search engine, but Yahoo Japan it's run by the same group, but it's very different in terms of the business and how it operates. So let's just look at some of the business history. So 1996, they had the search engine similar to, of course, the search engine yahoo.co.uk.com in the West. But then the Japanese version was very different because they've expanded out. In 1999, they offered easy, convenient, and varied online shopping experiences. Then they launched Yahoo Auctions, which is similar to, say, an eBay. They also launched a commercial internet service. So they've got Yahoo BB commercial high-speed internet connection from 2,280 yen per month, fueled by the proliferation of internet connectivity throughout Japan, changing the ways of internet usage. Z Holdings is also backed by SoftBank. So SoftBank is the world's largest tech-focused venture capitalist fund. They were known as the Nasdaq whale, as they were investing heavily in the Nasdaq, actually moving the market massively. So 2018, they launched PayPay, a mobile payment service with SoftBank, and they rapidly increased users and merchants through large-scale campaigns. Average monthly users, 67.43 million monthly users. E-com transaction value, 2.3 trillion yen. Over 100 of different services, 48.39 million logins. So Yahoo Japan will create a future that can be only shaped by us. That's their mission statement. They are driving the shift towards a cashless society. So Japan is currently in the midst of a nationwide push to promote cashless payments. This push is motivated by the potential to realize a society offering high levels of value to both customers and businesses alike by utilizing data gained through digital payments, which improves productivity in various industries. So what are the competitive advantages of Z Holdings? Well, firstly, they have one of the largest user bases in Japan. They have a diverse lineup of services with a comprehensive grasp of user actions, high quality, multi-big data. Through this data which is collected, they can improve user experiences through collaboration between different services, and they can get growth by encouraging user traffic between different services. So let's say they've got someone that uses their Yahoo Japan search engine and somebody that uses their e-commerce part. They can basically combine the customer data from each of the different platforms and cross-deliver value to a network of different people. So as you can see here, we have Explore, so they have the search, conversion media, commerce, purchase with the shopping, pay through PayPay, enjoy, so they have original services. So they're also I believe involved in production of movies and films in Japan, and they have encounters, so they have media and ads. Right guys, if you found some value in this video so far, feel free to give it a big thumbs up. That helps out tremendously with the YouTube AI. And if you're new around here, feel free hit that subscribe button for more investing tips and exclusive stock market picks, which I'm personally investing into. With that being said, let's deep dive into these numbers. So we're here on Stockopedia. For those of you guys that don't know, this is the platform I use all the time to analyze stocks. I find it tremendously helpful. As each stock is given a stock rank, it allows you to quickly analyze the most important numbers when looking at stocks. If you wish to check it out, I've actually got 25% off discount link. I'll leave that in the description below. It's exclusive only for you guys, the viewers of Motivation to Invest. So feel free, check it out and see if it fits your investing style. With that being said, let's deep dive into the numbers for Z Holdings. So technology adventurous, large cap neutral, momentum 86, quality 55, stock ranks 58. So it's not an amazingly high stock rank at the moment. So revenue, it's forecast to increase 1.2 trillion yen in 2021, 1.4 trillion yen in 2022. So the compound annual growth rate of this company is nearly 20%. Now, generally, I say a growth stock should be at least 20%. This is nearly there, which is not bad for such an established company. This is not one of those growth stocks which is unprofitable and you have to wait for many years and hopefully it will become profitable. This is an established company, extremely profitable. The unique thing about this company as well is they also pay an ACE dividend. So the dividend yield is 1.39%. Now, the reason I think that's great is because you don't often get a nice dividend in any of these tech companies or these growth companies. So to find a company with a nearly 20% growth rate and it's paying a dividend, well, that's the best of both worlds. That's something that Warren Buffett would love and the great Cathie would. So net income's forecast to increase in 2021-2022, as is earnings per share. So these are the important numbers. Let's check out the analyst consensus. So we've got people here from Credit Suisse, Goldman Sachs, Tokyo Research Center. 1 hold, 5 buy, 2 a strong buy. Sales growth 15%. return on capital and return on equity. Now that seems quite low, to be honest. So a main driver of growth is the return on capital and also the return on equity. What you want to be looking at is when this business raises capital from, say, SoftBank or the stock market, it's got all this capital, or even using its profits, and it reinvests that into the business. Is it getting a great return for investors? Is it getting high growth from that investment? So that does say it's quite low, 4.3%, and 10% is not amazingly high. But it is a very complicated company in terms of the amount of different services it offers. So maybe that is one difficulty with trying to quantify the exact return on capital. Operating margin 15.53%. That is pretty good also. P ratio 33, so that's also quite high. However, the price to sales is just a 2.7, which is pretty good. So you may be thinking, Ben, this company seems good, but is it incredible? And why is Cathie Wood investing into it? Well, as I've informed many of you guys before, Cathie Wood and Ark Invest runs many active ETFs. It means they actively trade stocks almost daily in order to find the best deals. So as you can see, if we dive into the share price here, the stock recently had a major correction and is down by 11%. Is obviously a good opportunity where Cathie Wood and Ark Invest are seen to get into the stock. And so they've bought really at the bottom of this dip here, probably caused that slight jump up 3% there from that low. But still, it's still down a nice amount, so that could be a good opportunity to get in there. Let's see how much it's up by year to date. Year to date, it's up 46%. So let me know your thoughts on this stock. Are you investing into it? And what do you think about investing into Japan? Now, the second part of my video, I'm going to briefly run over a few stocks which have had major run-ups today. So this is a bit of a news roundup. I don't usually do this so current, but if you guys like this type of update, hit that thumbs up button and comment below. So first, let's look at Qualcomm. So Qualcomm, the stock is up by, it says here, pre-market 14% and previously nearly 3%. Now, that is an incredible amount for this chip maker. So what has caused this major stock run-up? Well, it turns out that Qualcomm recently beat earnings estimates for Q3. Qualcomm released a statement, our fiscal fourth quarter results demonstrate that our investments in 5G are coming to fruition and showing benefits in our licensing and product businesses. So they have the 5G smartphones which are driving Qualcomm's earnings. And of course, Qualcomm, who do they supply? Apple. And who's bringing out a new phone? Apple. So the 5G wireless transition has positioned Qualcomm for growth in 2021 and beyond. Chips for smartphones, especially 5G handsets, are the biggest drivers of Qualcomm's growth. So let's deep dive into the numbers now for Qualcomm. Qualcomm, ticker symbol QCOM, stock rank of 82, which is incredibly high. Momentum of 95, value of 21, quality of 95. Now, I may have informed you guys previously, but the stock ranks on Stockopedia, they've been calculated by a variety of experts. And if you would have invested into stocks with a higher stock rank, they've actually been proven to have outperformed the market. So this stock rank is fairly important when analyzing a stock. And it's only available on Stockopedia. Link below. And it's only available on Stockopedia. So remember, guys, there is that link below if you wish to check it out. Now, the revenue is forecast to increase. 2021 is where it's going to see a major jump up to $28 billion in revenue from just $19 billion now. So that's an extra nearly $10 billion in revenue, mainly driven by the 5G handsets. Net income's also forecast to increase, as is earnings per share. Analyst consensus 7 hold, 15 buy, 8 a strong buy, 1 sell. So very bullish analysts on this stock. Current ratio 1.97. Generally, I look for a current ratio of at least 2. Means the company has enough short-term cash to cover its short-term debts. 1.97 is virtually 2. That's great there. Return on capital 12.8%. Return on equity. This is what I like to see. 76.5%. So from their investments into the 5G space, they've actually received major returns, 76.5% and 12.8% on the return on capital. Operating margins 15.58, which is also great for the industry. Value 19.8 on the PE ratio, so could be a little bit lower on the PE, but that is still below the general market, I believe, because the general market, I believe, currently has a PE of around 25, 24. So 19.8, still not too bad. the stock has run up slightly. And the final stock I'm going to analyze is one that I'm personally invested into, and that is Upwork. Now, Upwork is one of the leaders in the freelance economy, the gigger economy that we're moving into. So you have Upwork and Fiverr. Fiverr is doing a lot better in terms of growth, in terms of revenue. However, Upwork is the better valued version. That's the way I look at it at the moment. Ark Invest was investing heavily into Fiverr, but now the stock has ran up massively. So I pivoted. I had a small position in Fiverr, but I decided to increase my position in Upwork as I felt that they are near enough the same site, except Upwork was at better value. But still, I feel if the freelance economy continues moving forward, then both companies will benefit. Upwork is also often seen as the more professional freelance website where you can hire people for data science, engineering, sales and marketing, design and creative, web development. So it is an interesting business, trusted by over 5 million businesses, including Airbnb, Microsoft, General Electric. A lot of people use this website. It's great for startup businesses, as if you want to just hire, say, 10, 20 people, but just pay them per project, it makes it really simple. So when I looked at my portfolio today, I was pleased to see that the stock and pre-market had a major run-up by over 27%. Now that is incredible to see. Now bear in mind, this is still a small market cap company, just $2.43 billion. So there's plenty more room for this stock to continue growing. So why has the stock ran up so much? Well, although the company is still unprofitable and reinvesting for growth, their revenues actually beat estimates. And that's why the stock rallied. It is an interesting stock, and with my personal portfolio, I definitely want some exposure to the freelance economy. So that's today's video, guys. I hope you found that valuable. I hope you found that informative. If you did, feel free, give this video a big thumbs up. That really helps out tremendously with the YouTube AI. And if you haven't subscribed already, hit that subscribe button for more investing tips and exclusive stock picks, which I'm personally investing into. And be sure to comment below your thoughts on the stocks mentioned, and if you want more of these daily news roundups of the stocks and the earnings, or would you prefer more individual stock deep dives? With that being said, I hope you guys have an incredible day, and I'll see you guys in the next video. Invest safe.